Welcome to the deep dive. Today, we're looking at some major economic news coming out of Korea, really focusing on how everything seems to be clicking together.
That's right. We've got sources covering a huge market surge, some pretty significant regulatory shifts, and even government moves on energy costs.
So, for you, the listener, we're going to connect these dots. We want to show how the financial markets, these core regulations, and industrial policy are all intertwined.
Yeah, it gives you a much clearer picture of where the capital is moving and honestly where the strategic focus is right now.
Okay, let's kick off with the big headline then. The KOSPI. It just closed at a historic high, 3,549.21.
Wow.
Yeah, smashed through 3,500 just, 2 weeks after hitting 3,400. The total market cap is now a record 2,922 trillion won. That's incredibly fast movement.
It really is. And the engine behind this surge is foreign capital, just an unprecedented flood.
Unprecedented how?
Well, foreign investors, they were net buyers of over 3.1 trillion won in a single day.
Seriously, 3.1 trillion.
Yeah, the sources say that's the largest daily volume they'd ever recorded since they started tracking this data back in 2000. It signals huge foreign confidence, especially in Korean tech.
And we knew where that confidence is aimed, right?
Yeah.
It's the semiconductor giants.
Exactly. Samsung Electronics, SK Hynix, it's all tied to the buzz around massive projects like OpenAI's infrastructure plan, the one they're calling the Stargate project.
Right, Stargate, that's been getting a lot of attention.
And you see it in the stock performance. SK Hynix jumped almost 10%, closing near 400,000 won.
Huge jump.
And Samsung, it briefly hit 90,000 won again during the day. But here's an interesting twist.
Okay.
While all this foreign money was pouring in, domestic individual investors, they were actually net sellers.
Selling into the rally.
Yeah, selling over 3 trillion won worth. Looks like they were taking profits while the foreign funds were buying aggressively.
That's a fascinating dynamic. Foreign capital looking long-term at global tech infrastructure, maybe, while local investors are, cashing in quick gains.
Seems like it. And you had President Lee Jae-myung weighing in, basically saying this trend, this tech-driven momentum itself will not change so easily, kind of validating that foreign optimism.
Trying to reassure the market, maybe?
Possibly. But it also brings up a critical point. These massive projects, like Stargate or building out domestic AI, they need investment on a scale we haven't really seen. We're talking multi-trillions of won.
Okay, yeah. The current system probably isn't set up for that kind of capital deployment, is it?
Not really. And that leads us straight into the next big piece. The government actively looking to ease regulations. Specifically, they're targeting Kumsumbunri.
Imsumbunri, right. The separation of industrial and financial capital. Let's unpack that a bit.
Sure. It's a really core piece of Korean financial regulation, goes all the way back to 1982. The main idea was to stop the big industrial conglomerates, the K-balls, from using their industrial might to basically control banks or financial institutions for their own benefit.
So preventing self-dealing, essentially.
Exactly. Which makes tinkering with this rule, well, politically sensitive. There are deep-seated concerns about chaebol power.
So if it's meant to limit chaebol influence in finance, why ease it now?
Because technology, especially AI and semiconductors, demands these huge long-term investments that the current rules kind of stifle. The first step they're taking focuses on corporate venture capital, or CVCs.
CVCs, okay. I know those were already a bit of an exception, letting holding companies invest in startups, but they were quite restricted, weren't they?
Very restricted. They had to be 100% subsidiaries, face tight debt limits, and crucially, could only raise 40% of their funds externally.
40% external funding. So they were basically managing relatively small pots of money.
Right. Hundreds of billions of won, maybe. Think small private equity funds. Absolutely not equipped to handle multi-trillion won projects like massive AI data centers.
So the proposed changes are designed to scale them up significantly.
Precisely. The sources highlight two main changes. First, increasing that external funding limit from 40% up to 50%.
Okay, a bit more flexibility there.
And second, allowing them to invest more overseas, bumping the limit from 20% of the fund up to 30%. It's about enabling bigger funds with a broader, more global reach.
To handle the kind of capital needed for things like Stargate.
Exactly. The policy is trying to catch up with the tech. Professor Hong Young mentioned this. The old rules fit a manufacturing economy, but today's tech-led growth needs bigger investment pipelines.
But they're being careful, right? Trying to avoid political backlash.
It seems so. Crucially, they're keeping the rule that stops CVCs from investing in companies owned by the controlling family or their other affiliates.
Ah, so maintaining that safeguard against the most obvious forms of self-dealing.
Right, it's a balancing act. They need the K-Ball's capital for these vital tech projects, but they also need to address public concerns about corporate governance. It's a real tightrope walk.
Okay, so you've got market momentum, policy shifts to unlock capital, but these huge industrial projects, especially tech infrastructure, they need something else too.
Yeah.
Stable, predictable operating costs. How does that fit in?
Ah, yes. This is where it gets really interesting, connecting the capital side with the operational side. The government seems acutely aware of this.
How so?
Well, the Minister for Climate, Energy and Environment, Kim Song-hwan, made a strong statement. He basically said industrial electricity rates must not rise further.
Must not rise, even with the push for renewables, which can sometimes be more expensive initially.
That's the commitment. The goal is clearly to keep Korean companies competitive, especially with global pressures. You have to remember, the previous administration raised industrial rates 7 times.
7 times. Ouch.
And residential rates 5 times. So the current thinking seems to be that industry needs protection from rising energy costs to fuel this growth.
Protecting the base cost of doing business.
Exactly. And this ties into governance stability, too. The minister also pledged to speed up appointments for heads of key energy public corporations, like KPCO, the main power utility, and critically, the Korea Power Exchange, KPX.
KPX, that's the grid operator, right? The air traffic control for electricity.
Precisely. And having the KPX chairmanship vacant, run by an acting head for over 4 months, that's not ideal when you're promising energy stability and managing a complex grid.
No, you need stable leadership there for sure.
Right. The minister called electricity the most important basic asset. It's not just about meeting peak demand in summer or winter, but also managing periods when there's too much power, like holidays when factories idle. Managing both ends is key to cost control.
Cost control, which in turn supports the industrial investment climate driving that KO-SPI surge. It all connects.
It really does seem like a coordinated strategy.
So with all this capital flowing, policy shifting, and cost management focus, what's the immediate impact on the ground in the local economy?
Well, one clear ripple effect is in real estate. We're seeing a definite hot market, especially in Seoul apartments. Prices have been rising for 4 straight weeks now.
4 weeks. Okay, where's it hottest?
The Han River Belt is really leading the charge. Places like Seongdong-gu saw a 0.78% rise, Mapugu up 0.69%, and Gwangjin-gu had its highest weekly jump, 0.65%, since they started tracking in 2012.
Wow, strong numbers in those core areas. Anywhere else?
Yeah, interestingly, areas near Gangnam are also surging. Seongnam-Budong-gu actually had the highest rise nationwide, almost a full percent, 0.97%.
Duh.
And Gwacheon up over 0.5% too. It's not just new builds either. The analysis says prices are climbing fast for both new and existing apartments.
So the takeaway is that demand is really picking up speed across the board.
It looks like it. The pace kind of resembles previous surges right before major regulations kicked in. It suggests there's a lot of capital, a lot of confidence, and it's looking for a home in physical assets now too.
Okay, so let's try and tie this all together. We've seen this incredible foreign investment driving the KSPI, fueled by faith in Korean tech, like semiconductors for projects like Stargate.
Right. Then we saw the government making significant policy moves, easing Jomsun Bunri, specifically for CVCs, trying to unlock domestic capital at the scale needed for these massive tech
Costs stable, which is crucial for supporting that industrial expansion.
And the immediate local effect seems to be this heating up of the real estate market as confidence and capital spread.
It really does paint a picture of quite a deliberate, interconnected strategy, financial markets, regulation, industrial costs, all pointing towards boosting tech-led growth.
Absolutely. It's the alignment of market confidence and government action. And think about this. If they succeed in keeping those energy costs capped, they're essentially creating a very favorable, almost subsidized environment for building out critical AI and semiconductor infrastructure.
That's a huge potential advantage for Korean companies on the global stage.
It is. Which leads to maybe the final thought for you to consider. If this strategy works, market surge, unlock capital, stable costs, how does this aggressive state-backed push change Korea's competitive position globally, especially against, say, the US or Europe in the race for AI dominance? That's the multi-trillion-one question, isn't it?
A very provocative question indeed. We've covered the KOSPI surge, CVC reform, energy cost stability, and the real estate ripple effects today.
We'll be back soon with more insights from the front lines of the economy.
Until then, this has been the Deep Dive from Seoul Economic Daily. Thanks for listening.